Hey guys, it's Carter coming at you with a gold and silver update here. And if you recall what I had to say in mid May, well, we got this one wrong. We said that in mid May, gold and silver was likely going to see a hot girl summer, a big rally towards much higher levels, provided we held some key support on these charts. So the gold support was at 4,400 to 4,250, we defined in that video in mid May. And you can see we did see a bit of a bounce off of it, but eventually sliced through these levels. And I had to flip bearish. That's what happened on gold. And here on the silver chart, we define the key support at the 70 to just sub $70 level. We saw consolidation above this level, really no break higher, just consolidation and then eventually a breakdown. So we did see the pattern fail, and I had to flip bearish when we did see these breakdowns. Unfortunately, is what it is. That's not what I wanted to see. However, I took a couple losing trades. Is what it is. So yeah, I did get gold and silver wrong in mid-May. I thought we were going to likely hold the key support levels that I identified and see rallies off those levels. However, we saw breakdowns, and it's a humble reminder that the market can do whatever it wants. It's a humble reminder that technical analysis is not a science. If it was science, it would be repeatable, it would be predictable, it would be objective. But as you can see here, there's nothing 100% in financial markets. There's no guarantees. So yeah, that's why psychology is a very beautiful thing. It's amazing because it's not a science. It's not 100% objective. It's not 100% repeatable. So because it's not a science, we have to use risk management. And because we know that psychology is not a science, and we have to use risk management, because I mean, if we won every single trade, hey, it would be a scientific fact and life would be good. But unfortunately, it's not. So the risk management that we have to use by believing that psychology is not a science actually saves us so much more money in the long run. So it's very important to remember that technical analysis and psychology is based on probabilities. It's not a science. And that alone is going to have you much more likely to follow some sort of risk management principle and save you so much more money. And I know someone is going to come at me in the comments and say, hey, but psychology is a science. One, no, it's not. Or someone's going to say, hey, psychology is a pseudoscience. Pseudo means fake. Fake equals not real. It's not real. It's not a real science. But yeah, it's amazing. It's a beautiful thing. And just because psychology uses the scientific method does not make it a science, people. I mean, hey, I use a microwave. It's a method to cook food. But just because I use that method to cook food, it doesn't make me a chef. Hell no. I often pour too much milk and ruin my craft dinner. So no, I'm the furthest thing from a chef. But back to the charts. What we saw here was gold and silver taking the less probable path, and sometimes that happens. Now, I know a lot of people are not going to like my excuse for being wrong by saying this is a probabilities game, but that's exactly what it is, and it is what it is. I'm just trying to be authentic here. And everyone's all about authenticity these days until you actually get some honesty. Like, I was walking the other day, and I just quickly asked a young lady, hey, how are you? Response, terrible. Keep it light, psycho. Like, seriously, I guess I didn't want to hear that answer. Lesson learned, don't ask questions you don't want to know the answer to. Um, so a lot of people don't want authenticity. They just want to hear me say, hey, I screwed up. And yeah, I did get this call wrong, but it is what it is. It's a probabilities game. And if you use risk management like I did, I lost a lot less money than I could have on these. All right, so rant over. Has gold and silver finally reached a bottom, or is there going to be more downside in the coming days and weeks? Do you still trust me to tell you the most probable path? Join me in this video. I'm going to tell you what I think is the most probable anyway. All right, so here you can see on gold that the pattern has now shifted. So the pattern is now most likely that we're dealing with an A, B, C move to the downside that has not likely bottomed. We're not likely at the bottom of this gold correction. We likely have further downside to come in the days and weeks. And that remains probable. More downside remains probable. A break below our recent lows made just under 4 grand remains probable, provided we don't see a break above 44.50. Hey, if we break above this resistance here at 44.50, I will flip bullish. I will flip bullish if we see a sustained break above 44.50. Until we see a break above 44.50 right now, we have to assume that this bounce we're seeing is more likely of corrective nature, that's more likely going to get rejected by resistance and roll over to take out these lows around 4 grand and make new lows here on the price of gold towards the key support levels, the key major support levels between 3650 and just sub 3500. So there's structural support if we look back here. Back in 2025, we consolidated under the 3,500 resistance level for quite some time before breaking out. If we came back to test that level today, it should be tremendous support. We also have some key targets just above there. If we take out the lows here on gold, which is the most probable path right now to take out the 4 grand lows here on gold in the coming days and weeks, possibly months, we are likely going to see a rollover into support towards 3650 and possibly 3500. Those are the levels I'd look for a major C wave low to occur. So now I quickly just want to touch base on silver. What's likely occurring here? It's very similar to gold, provided we don't take out this now resistance at around the $70 pivot right in here. This horizontal level of resistance at around $70, provided we stay below that level in the coming days and weeks, I'm going to remain in the camp that we're likelier to see a rollover towards support levels at around the $50 to just sub $50 level, key targets being at around $46. And once again, we are seeing a much larger ABC correction occur here on silver, just like gold. And yeah, I would look for a major low to be made on silver between the $50 and $45 level. We have key targets at around the $46 level. So yeah, any bounce in the coming days and weeks that stays below $70 is likelier to roll over and create a fresh new bear market low here on silver. But we can still see a little bit of a short-term rally before we take out the lows made on silver. Trust the charts and keep risk management on the back of your mind because, hey, we're dealing with uncertain, chaotic markets. I'm giving you the probabilities. It's your job to risk manage. All right, that's all I have in this video. Take care. Have a good one.